Hey guys, this is Mr. Roxy coming at you live from Lake Worth in Florida today. A couple of things we're going to look at. First, spend a little bit of time, just a few minutes, to talk about the Biden tax plan, what's in it, what's not. Of course, it hasn't been passed yet, but we can certainly take a look at that. And then we can look at Chevron and Exxon. And they both reported, and Royal Dutch Shell, kind of see where we're at. But let's first talk about the Biden tax plan. Now, I realize and recognize that the majority of people on our channel are not necessarily impacted by the Biden tax plan because you're not US tax persons. But, you know, the old adage is when the United States sneezes, the rest of the world catches a cold. So let's see how we did here. So the corporate tax hike and a new levy on billionaires didn't make it into the Biden administration's proposal to pay for social spending priorities. The tax plan aims to pay for clean energy initiatives, universal preschool, and many more items in the White House's sweeping Build Back Better agenda. Isn't it funny how all the politicians say the same thing, right? Build back better, build back better. Everybody says it. You name somebody internationally who's a politician, they all say the same thing. How does that happen, huh? Negotiations are expected to continue over the package, which shrank to 1.75 trillion. That's a few trillion between friends, from an original target of 3.5 trillion. So what's in? A minimum 15% corporate tax. The White House is aiming to raise $325 billion over the next 10 years through a 15% minimum tax on big corporations based on profits reported to shareholders. The Wall Street Journal reported backers say the minimum tax would apply to about 200 companies. One of the companies they're targeting here is a company like Amazon, which reported little or no tax expenses despite recording sizable profits. Stock buybacks. Remember, we're talking about what's in. So minimum 15% corporate tax, but only applicable to a certain few companies. Stock buybacks. Corporations that purchase their own shares could see a 1% surcharge on these buybacks. The White House said that executives use buybacks too often to enrich themselves instead of investing in workers and the economy. If this provision goes through, meanwhile, investors shouldn't expect it to weigh too much on share repurchases, according to analysts at Goldman Sachs. What else is in? A surcharge on the 0.02%. So never mind the 1% or the 0.1%. This is the 0.02%. What does it say? Though the top marginal tax rate on individuals won't change under the Biden plan, the very wealthy won't get off scot-free. As MarketWatch reports, the highest end households would face a 5% added tax for income above $10 million annually. And once the income reaches $25 million, they will pay an extra 8% in additional tax. That would affect approximately 0.02% of Americans, according to the White House. How about energy tax credits? This proposal makes major investments in climate, including through tax credits to encourage moving toward cleaner energy sources. Gee, that's a weird sentence. It includes expanded credits to boost usage of clean energy at utilities and homes, and for transmission and storage, as well as for clean passenger and commercial vehicles. The child tax credit also made it in. An enhanced child tax credit would continue for another year under Biden's plan. The year-long extension is a disappointment for Democrats who wanted to make it permanent. And it also falls short of Biden's previously sought extension and promise to make it applicable through 2025. Right, that's what's in. What's out? Corporate tax rate hike. Democrats jettison plans to raise the federal corporate tax of 21%. So you might remember that under President Trump, the corporate tax rate was decreased to 21% under the Tax Cut and Jobs Act from 2017. So that corporate tax rate hike that Biden wanted to impose is not going to happen. So the corporate tax rate remains at 21%. What else is out? Tobacco and nicotine tax. An excise tax on tobacco and nicotine products was also left out of Biden's proposal. I'm kind of indifferent on that. The oil industry avoided pain in the House Democrat tax bill, but tobacco and vaping got hit. Okay. Salt. This is an acronym. Biden's framework didn't mention changes to the state and local tax deduction, which is commonly abbreviated as SALT. Democratic lawmakers say they expect changes to the cap before any bill is voted on. A billionaire tax is out. The proposal to tax billionaires' unrealized capital gains proved to be short-lived, drawing opposition from the likes of Tesla chief Elon Musk. It would have hit about 700 Americans, but it also faced a potential challenge on constitutional grounds. Elon Musk summed it up like this. He said, eventually you run out of other people's money and then they come for you. That's something to keep in mind, right? So whatever it is that politicians say will only apply to the 1% or the 0.02% or whatever, that's today. Just wait. Eventually, they will come for you. Irs Bank Reporting requirements, even a scaled back proposal to have banks tell the Internal Revenue Services about certain customers' accounts. Cash flow flopped in the face of opposition from Senator Joe Manchin, the West Virginia Democrat, not to mention many, many conservatives. That was the proposal where they said the IRS needs to be able to track every transaction of $600 or more. It's kind of ridiculous if you think about it, you know. All right, so let's take a quick look at the energy stocks. So Chevron comfortably beat third quarter earnings on Friday, while Exxon's earnings just beat as it announced a new buyback program. Going to be subject to that extra 1% tax on that buyback program. US oil prices have climbed past the $80 per barrel benchmark for the first time since 2014. 7-8 years, huh? OPEC has kept production growth steady to help support oil prices despite calls from the White House to boost production further as demand rises. While OPEC keeps its production curtailed, analysts say the rising oil prices won't be enough to spur oil stocks to rapidly boost drilling after years of careful capital discipline. How about Royal Dutch Shell? They kicked off the week and they reported, when was it, on Thursday? Yeah, just yesterday. Today's Friday, October the 29th. Shell's Q3 revenue fell short of Wall Street's expectations. Activist investor Daniel Loeb's Third Point disclosed a large stake in Shell on Wednesday. He's reportedly pushing for Shell to break into two entities to help keep investors that are looking for more climate-friendly stocks. Climate change will continue to be a big topic for oil majors in their Q3 reports. Exxon CEO Darren Woods and Chevron CEO Mike Wirth were called to testify at a House hearing on Thursday about big oil's role in disinformation related to climate change. Chevron, the estimates were $2.20 and revenue of $39.97 billion. But Chevron actually came in with $2.96 a share. So the EPS was expected at $2.20. They came in at $2.96. And their revenue soared 83% to $44.7 billion, 39.97 expected. Net oil equivalent production was up 7% year over year to 3 million barrels per day. Exxon, the estimates were $1.56. They came in at $1.58, just a slight beat. And revenue was 71.13 anticipated or expected, and they came in with 73.79. So just a slight beat on earnings per share and revenue for Exxon. But production from the prolific Permian Basin rose 30% year over year to approximately 500,000 oil equivalent barrels per day. The oil giant also said that starting next year, it will increase shareholder distributions by buying back up to $10 billion in Exxon stock. Exxon sees future annual capital investments of $20 billion to $25 billion. So Exxon and Chevron having a good day on the markets today, while some of the other stocks, including probably your favorite and mine, are under a bit of pressure today for a variety of different reasons, including my uranium stocks. But guys, that's kind of the news headlines. In the greater scheme of things, from a macro point of view, nothing has changed. We have WTI at over $80 a barrel, and it's been sort of at or around that price for most of the quarter. So we'll have to see what the average is for Q3, but whatever it is, it's pretty good. Demand is off the charts. There's no way on earth right now that there is sufficient supply to meet the demand. So that's a good thing in our favor as well from an energy point of view. The quest for clean energy is making people pay more and more attention to uranium as a commodity. So that might be something that you want to take a closer look at. And in the greater scheme of things, all the things I just mentioned, excluding the Biden tax plan, might give us an indication as to what we could expect from Occidental Petroleum when it reports next week. So their their reporting date is after market close on November 4th, and the conference call is on Friday Eastern time. I think it's either at noon or at 1 o'clock. I think it's at 1 o'clock on Friday, November the 5th. So let me know what you think, and let me know sort of where you're at, and let's get some conversation going and see what we think about energy and where it's going. And maybe you can give me your predictions as to when Oxy is going to hit $40 a share. So on that happy note, this is Mr. Oxy signing off. Thanks for watching. Bye-bye.